Well, hello everyone. Welcome to Trading a Smaller Account. My name is Barbara Armstrong. I'm a coach with Charles Schwab and delighted that you have chosen to join us this morning. And, I signed in to look at the chat 10 or 15 minutes early, and there were already a bunch of comments and some thought-provoking questions in there. So I hope you guys are ready to roll up your sleeves and get down to business, because today I want to talk about thinking like a trader. Because as I was looking at some of our positions this morning, I thought, well, how would a trader think about these positions, one that we have exited and the ones that we're still in, and then how might we think like a trader about the opportunities that are out there today? So we're going to put our Think Like a Trader hat on and get down to business. If for some reason you have ignored all my previous invitations to follow me on X, consider this your formal invitation for this week. My handle is at Barb Armstrong CS. We have Cameron May with us in the chat today. He's a fellow coach and a friend, and if you're not following him, you're missing out. His handle at Cameron May CS. I'm posting content there on a daily basis that I think you'll find helpful and informative, and it's another free resource for you to take advantage of. So feel free to check it out. Let's get through our important information so that we can get out to the platform, because as always, we have a ton we want to cover today. So know that options carry a high level of risk, aren't suitable for all investors. We do a lot of option trading in this intermediate to advanced level class. And I know this is trading a smaller account, so some people might come here thinking this is a beginner level class. And while I keep things very simplistic, my assumption is that you understand basic option strategies and basic stock investing strategies. And if you do not, please let me know so that I can give you a 30-second overview of the strategies we're covering today, but also so that I can point you to the necessary resources to help you kind of get up to speed. Know that the Paper Money software application on the thinkorswim desktop platform is the platform that we use to place all our example trades, and we have an example portfolio there. It is a brilliant place to learn. Now, there are some nuances and differences. The one I typically point out is that short option positions will never be assigned early in Paper Money. That can happen in a live account. Also, dividends are not paid in a Paper Money account, and those can be paid on stocks that pay dividends if you own a stock. And that doesn't happen in Paper Money either. Okay, so I've got one quick announcement. We're going to go out, this is our usual format here, have a look at what's going on in the market, and then do a mix between managing existing trades and placing new example trades, because, you've only got half the recipe if you're competent at placing example trades. It's just as important to know when to get out as it is when to get in. And I, had one friend, she was brilliant at getting in, terrible at getting out. And the results were not pretty, my friends. They were actually quite devastating. So that's why I try and spend a balance on both in this class. Okay, so here's our quick announcement. Coming up, this coming weekend, if you're in the Miami area or have a hankering to go and don't already have a flight booked, we'll be doing a one-day event in the Miami area. If you'd like to join us, we'd love to have you there. Kevin Horner will be there also, along with Ben Watson, and we fly people in from all over the country for these market day events. So we hope you'll consider joining us. It's free to attend. You just have to get there. And then we're in Orlando the first full weekend in December, and we wrap up the year in Houston, December 13th and 14th. These are both 2-day events, and, again, free to attend. Yeah, Cameron said he's joining the crew in Miami. So yeah, if you'd like to meet Cameron in person, head on out to Miami. Okay, so that's the quick announcement. Now let's bring up the thinkorswim platform and start with the S&P 500. And somebody had typed into the chat like, hey, is this Harami Day? And yeah, I guess it is. And if you're not sure of what a Harami is, it is a day where the current day is totally within the body of the previous day. And so we can see that that's happening on the S&P 500. In fact, spoiler alert, I think when I looked at all the indices, the four main indices this morning, it was happening on each and every one of them. I guess I'd have to, but, and if you want to expand something, we can always come to our price axis. And I'm going to come to auto on this. And if I want to give myself a little more room at the top, I'm just going to add a little more so we can kind of do this. So, some might look at this and say, we have a Harami pattern at a previous resistance level that now appears to be acting as a support level. And this is considered to be pretty bullish. Now, if you're wondering, how might I trade this on an index? We may look at that, or an ETF, which we don't talk about in this class. I am filling in for Connie Hill this afternoon in the trading ETF class. And I will be answering that question there. That class is not archived. So if you want to come, you have to attend live. Okay, but that'll be cooking this afternoon. So our S&P up almost 23.5% year to date, and we've got this bouncing off a support level. The other thing that, our technical types might be looking at and saying is like, hey, this is kind of cool because I see a bull flag happening here. Now, we don't have a close above the high of the low day. And, some technicians might look for that and some might say, hey, this Harami pattern from a technical definition doesn't need confirmation. Having said that, is this a guarantee? Yeah, if only. Yeah, there are no guarantees in life and in trading. You never know what might happen, which is kind of what makes it exciting and sometimes frustrating and causes gnashing of teeth, but that's the way it is. And then, again, we have this similar thing. Now, this pulled back and broke below this support level, which was a little concerning, but it seemed to be caught by the 30-day moving average. And today, another Harami pattern, right? Which is considered bullish at a support level. So, and again, index up 22% year to date, extraordinary. Is this typical for either of these indices? No, it is not. Now here, again, if we're playing I Spy with my little eye, one of our favorite technical games to play, you might say, well, I see, and it's not just perfect, but I see this cup and handle pattern. It broke out. It's come back to retest. And what do we have here? Harami. So not salami, Harami, at a support level. So is that considered bullish? Check. Yeah. Even though we don't trade a lot of, we don't trade a lot of small caps per se, but some of these small caps are, multi-billion-dollar companies. And if you want to see who the top ones are, you can always, if you sign into Schwab, you can pull up some of these indices and have a look at who the top players are. Okay, and the Dow, door number 4. So this one, not a Harami, but we've got a candle pattern, this kind of doji or spinning top pattern at, old resistance. Could this be new support? And this might say, hey, this pullback is drawing to a close. Now, sometimes is it a fake out? Could be. We'll know better by the end of the day or tomorrow. Yeah. And then how's the VIX? Well, if I were a guessing man, I'd be guessing that it's falling. And what do you know? Down just a smidge, but at 1570, it's at the lower end of the range it's been trading in for the last 6 months, isn't it? So that's a pretty bullish sign also. And then when we look at our indices and I'm going to switch this to our public sector indices. And I've got our descriptions in here. And, you know, over the last month, who's leading the pack? Well, consumer discretionary, financials have been tearing it up. Like, and if I click on this, because I've linked my chart to my watch list, consumer discretionary hit a new all-time high in the last couple of weeks, pulled back, bull flag, bounce, and right now it is trading above the high of the low day or close to it. Financials up close to all-time highs. And I said, you know, this kind of looks like a bull flag and a stiff win, you know, and by that, I mean, just let me bring up my drawing tool again. Rather than going up and pulling back like the last one did, this one has kind of come up and then kind of gone straight out, which some might argue is even more bullish than, you know, a traditional bull flag. Just throwing that out there. And now energy, say what? Like this has been getting, you know, it's been really beaten up. It's been like, you know, the sad sister in the crowd. And look at, it's been on the rise. So we've got this inverted head and shoulders pattern breaking out. You know, will it hold? Well, we'll see. But, you know, that's interesting to see that. We haven't seen energy in the top three for a hot minute, and it just edged out like today because communications was in the third spot on Friday. And then of course, communications, the Verizons, the, you know, the Metas have been doing well. I just erase that. And then over the last 3 months, who's leading? Consumer discretionary, financials, industrials, communications. You know, energy is climbing up. Healthcare's got a lock on last place. And then consumer staples, which when you're really bullish, you know, we're not surprised to see staples closer to the bottom. But, you know, it's still up 13% year to date. But, you know, consumer discretionary, you know, up 23. Okay, so let's come to our monitor tab. And, you know, our little account, we will, I was asked on Friday, we will reset this to 20,000 at the beginning of January, first class in January. But it's been an extraordinary year, not a typical year, even for us. Okay, so we have two trades that we are now out of. The first one we put on Friday, and we did a long call vertical, and then we also did a short put vertical. So two bullish trades, and let's come and look at Tesla. So, and if you want to, you know, we wanted to compare, you know, one of these trades to the other, the long and the short. But we opened this trade on Friday, our long call vertical at 245. We got out at 375. And so, you know, what did we make on this? Well, we made $130 a contract, and we did two contracts. So, you know, that's base hit, right? Right. Just let me get my drawing tool going again. So we got in for 245, out for 375. So we made $130 a contract times two, you know, times our 100. So we made our 260. And, you know, given our account started at 20,000, that's over a 1% return on the entire account. You know, that counts. So, you know, we're happy campers. That's a base hit. And the extraordinary thing is we were in it for one trading day, not quite one whole trading day. And so that was a success. When we look at the return on risk, and this is not taking the transaction fees into account, it was 130 divided by the 245 we paid to get in. So 53%, which is basically, you know, our goal on a long vertical. Now, how is the short put vertical clipping along? Because we got paid a pretty hefty premium for that. $1.80 on a risk of 320, that's pretty heady waters for a short vertical. And where are we on that? So let's come in first. We'll look at Tesla. And we can see, like, we put these trades on Friday, so if in this class on Friday, and, so we're up and out of the short vertical, the long vertical, the long call vertical. If we come and we look at the short put vertical, and typically our guideline is that we'd like to get an 80% return, but we have a 44% return in one day. And so I'm going to pose this as a poll, and let me know, Tesla, the short put vertical, do we take the money and run? Because we're looking for 80%. And when I looked at this earlier this morning, we're looking for an 80% return on our max risk. Okay, so there, I've started the poll. And, we've got 18 days to go on this. Or do we say, you know what, we got 46% in one day. I think I'll take it. Because, if this goes up, could it come back down again? It could go up and keep on running. So yeah, so we've got 18 days left. And so while you guys are voting on that, let's go look at JP Morgan, because JP Morgan was the other one where we hit a target on this one. And so let's come over here to JP Morgan. And I want to look at the chart on JP Morgan first. So when we look at JP Morgan, we put these trades went on the 11th, and we placed a short put vertical, and then we did 2 long call verticals, one that expired on the 6th, and that's the one we're out of, that was less directional. And then we did a second long call vertical where we gave it an extra week. It expires December 13th instead of December 6th. And it was a little more directional. The first one was 235 and 240. The second one was 240, 245. Okay. And so when I look at this and then come back here, so just bear with me, because we're going through this thinking like a trader exercise in our minds, right? When we look at this, we opened 3 trades on that day. So at the short put vertical, we're still in. The long call vertical that's more directional, we're still in. And the less directional, shorter time frame long call vertical, we're out of. But if we come up here to our order history and we click on this, we wanted to compare it, this one that we got out of to the one expiring the 13th. And our target on this was less, our target was 30% instead of 50%. Because we were paying more to get into the trade. Just if you weren't there that day, you may want to go back and watch it. But when we come back and we look at this and we say, okay, so we paid $310 to get in. So we paid $310 to get in. The max that we could make would be is if this went to 5, because it's a $5 wide spread. So the most we could make on this would be $1.90. And we said, hey, if we can get half that, if we can make $1, we're happy. And so, And so we made our $1. We were risking $310, right? We made 1. Well, and actually our net gain was 200. Less the transaction fees, because we did 2 contracts. But 1 divided by our 310, and I already did the math on that, That's 32%. So that's what we were aiming for, and that's what we got. And we were having this conversation around, okay, your rule is 50%, a 50% gain. Which rules are malleable? Which rules can we have some room to manipulate? And then which rules do we not break ever? And so, this target goal we felt was a goal that we had some bandwidth on, and we could say, hey, we don't always have to go for 50%. We could go for 30% and be cool with it. But the rules we don't break our position sizing rule ever. And so you have to decide which rules are kind of set in stone and which rules can you fuss with. So now that I've said that, and we've looked at this part of it, if we come back and look at, first of all, the chart and say, hey, this has come up and we're getting this kind of dark cloud cover type pattern, where, well, and it was looking a little more ominous first thing, but this is a bearish candle at a ceiling or a resistance level. Could this perhaps pull back for a few days? So if we have 3 bullish trades on, one has hit the target, might we choose to exit the other 2 and say, hey, if this does come back, we could do a wash, rinse, repeat. But if we just let these trades run and it pulls back, then we've kind of given back that money. We may ultimately hit our goal and we may not, but then there isn't the wash, rinse, repeat option available because we're still in the wash. We haven't done the rinse to get to the repeat. So let's come over and look at the other 2 positions we have. So here on JP Morgan, on the short put vertical, the goal is 80%, but we're up 56. And it could be pulling back today. Now, why do we still have a profit if it's down a little bit today? Well, we had time decay working for us, and we also had volatility drop. And so I'm going to make an executive decision rather than having everybody vote, but that's the thought process behind it on this one for JP Morgan on the short vertical. Here we are. Let's just organize these by symbol, making it easier pour moi. So rather than waiting for it to go down a little bit more to the 22, we're going to say, hey, 46, good enough. Cancel and replace it. Sorry, I got my water bottle in the way of my screen. And we're going to unlock it. It's like you want 49. Well, dang, it was 46 a minute ago. Yeah, we'll take it. Short put vertical. So little win. And the goal being, are we still bullish on it? Yes. But we're looking at setting up, this is the rinse. So we've placed our trade, we've exited, and based on what the chart looks like today. And then we're looking for it, if it does pull back, for us to potentially re-enter. So we're out of that, little win. And then we also have that second long call vertical. And is it up 50%? No, it's up 33%, but we were willing to get out of the first trade at 33%. And I know we were going to do a compare and contrast, but maybe we just say, hey, given where it is, this gain, we could give all of that back and end up in a losing position. Or we might just say, hey, you know what, this is good, and we're going to leave it be. Okay, so choose to exit this one as well. And again, the thought process being, we're going to take our unrealized gain, turn it into a realized gain. This is our call vertical. So right click, cancel and replace. 315. We're good with that. Long call vertical. So we're saying, hey, we were originally aiming for 50. If we can get 33, we're happy. Okay, and then we're going to go back because I asked about the other trade on Tesla, and the vote was overwhelmingly in favor of taking the money on the Tesla trade as well. And so we're going to come back up here and scroll down to our second Tesla trade that we placed on Friday. And exit that one as well. Firm and send. Short put vertical bucket. Okay. Yeah, and Tesla may well run. It may well never pull back. And same with JP Morgan. But we're just saying, hey, if we have a bird in the hand, how does it look? And do we want to take it? Because our goal was an 80% of our max gain in, when did that one expire? Now I can close this out. December 6th. So, we still had 18 days to go. We said, well, we were willing to be in it for 23. We were in it for, one trading day. We were there over the weekend, and so we chose to exit. And so this one, we've got our exit in on JP Morgan. Now, you may notice there's this one here, and this is something that I learned from Kevin Horner. I was in the chat filling in, and what I think is pretty cool, like let's say we wanted to go and look at American Express. I can click on this one and then come up to the charts, and it'll immediately take me to American Express. Now, my guess is that feature has been there forever. I just didn't know it. But I think it's cool as all get out because, we have our chart linked. You'll notice this is a 1. It starts as a paperclip, right? So here's our 1, and we have it linked to our trade tab. We have it linked to our charts. We have it linked to the analyze tab. If we wanted to go and look at fundamentals to see which sector it's in, or read a little bit about where the company's based or whatever it may be. So now when we're at the monitor tab, we can just say, oh, let's look at this American Express trade. We have a short put vertical. Where are our strikes? At 285 and 280. And so when you come here, if you start typing in send to whatever color you prefer, that's what I added. So send to 1. I had no idea that was there. Isn't that cool? I'm going to do a little mini session on that. I may not get to it today, but plan is to get to it sooner rather than later. And I'll do just a little mini session. Many of you guys, well, I've now told you about this, but it'll be on just linking things on Thinkorswim. And I did promise to do a mini session on Friday. I did that where we were comparing a long call vertical and a short put vertical trade. It's 10 minutes long. It got approved really quickly, which is awesome. And that is up for your viewing pleasure. I will post it on X also right after this class. Okay. I forget what stock that was. Yeah. Been moving. We've had a lot of stuff moving pretty quickly in this class. And so I didn't want to take the time to kind of go through the math and the thought process behind it. Yeah. So yeah, Randy's saying, yeah, I just added that. And RCG is saying, yeah, he's been doing that for years. So we're all continuing to learn different things, on a daily basis. That was something new for me. Okay. So let's go and look at a new trade. And it's not a stock like we have. We have a long call vertical on Goldman Sachs now. Well, actually, you know what? Let's
look at GoDaddy. So GoDaddy we looked at on Friday because we own the stock, and the stock has done very well. We bought it back here. And so that's done well. We adjusted our stop and had a conversation around adjusting stops. But, if we're playing, that I Spy game, many would look at this and say, well, I see that Barb didn't erase her last screen. I see this bull flag, and it's currently, we've got that close above the high of the low day, which for some people, if you had a trading plan for a flag, which I haven't posted yet for a flag pattern, you might be looking for this close above the high of the low day, but we have that. So could we do a long call vertical trade, or could we that based, I don't know the price of the options, or could we do a swing trade? It's at 185 and say, hey, when it gets back up to 190, we would like to sell. So those are choices we can explore. Or could we do a long call vertical, or short put vertical? And the answer is we could look at all of those. Okay. Yeah, so Shiva's asking the question. You mentioned that you bought GoDaddy a few months ago, and we did. And what I had said is that, there were some years that we had a lot of money in this account sitting in cash and didn't have it invested. Like a couple of years ago, I mean, the market was tanking. The S&P was down almost, it was down like 18%, and the NASDAQ was down almost 30. And so, we did a lot of bearish short-term trades and left a bunch of money sitting in cash. Because this year's been so bullish, we bought a couple of stocks, Cintas, I think just last week, but GoDaddy, well, we bought that one in July. So for us in this class, we've been holding this a long time. And what we did was we sold a few of our shares to bring the position size back down to 5,000, because we were at about 6,500, and it put a 1,500 back in the account. Yeah. And so it's not that we're averse to buy and hold, but this tends to be more of a short-term income generating strategy or growth strategy kind of class. But one of the ways that you can do this, like sometimes we'll do, buy right covered calls with the goal of being called out. And so we just, closed out a trade on Bank of America, and we were going to add a new trade on Bank of America today. So we may go and do that. But I thought, well, let's look at GoDaddy. And so, yes, we don't tend to do that, but we have done it on occasion. And so if we look at this and we say, okay, if I look at the weeklies, we've got like no volume here if I wanted to do a long call vertical. So weeklies may not be a possibility, but could I come out to December? And when we look at the 185, 190, now these just became available, the 250 wide strikes today. And so, and we can see we have a similar bid-ask spread, maybe a little bit wider. Like here it's 30 cents, here it's 40, here it's 20. So if I look at this 226, could we do, a 185 and 190? And we're buying this one, selling this, or could we just buy the 190 and do a swing trade? So we're paying $3.30 for this. So this is the first strike out of the money. And say, we would like to buy just a single. We're going to do just one. And actually, with this one, because we're doing a swing trade, we're going to buy custom with an OCO bracket. And we want to get out if it loses half its value with a swing trade in our example trading plan. That's our exit. And then our market is we want to exit this when it gets back up to the previous high. And we're going to make that 190. Oh, you know what? I'm going to have to put this in after the class because I added another monitor and it's not letting me bring up a conditional order, but we're going to bring up a conditional order and then have our target at 190. And so I will do that after the class. Add the swing trade. I'll make a note. Sorry for that. It was on my list on Friday and I just didn't get to it. I can put in all the other types of trades, but the conditional order feature is, that box is going into some hole, unfortunately. So we're going to put that trade on. Okay. So the volume isn't a problem with this trade because we've chosen strikes that that work. Oh, and now I'm stuck. Dang it. Okay, let me see just a sec if I can escape. There we go. So I'm not going to try another one of those. Now, could we do, you know, and we don't have a lot of volume here. If we wanted to compare and contrast, we just have to pick different strikes. So if we're buying this, and this would be way more directional, the 190, no, we're going to leave it. I'll put that trade on. Okay. Okay. So that's that one. Now let's go look at Bank of America. Because Bank of America, we did a buy right covered call, and we did several covered calls on it before we were called out. And so here you have something hitting a new all-time high. So with a buy right covered call, you can kind of take two approaches. You can say, well, you know what? I want to buy when it's bouncing off support. And then, you know, the plan is to be called out. If we're looking at this, this is a stock, and this is trying to think like an investor. This is a stock that pays a little dividend. Now, it's not a lot. And in our pretend money account, it doesn't actually pay dividends. And even in a live account, there's no guarantee that dividends will continue to be paid. But this one, the ex-dividend date is December 6th. So we could receive this 26-cent dividend if it was in a real account, if in fact that dividend is paid. And, you know, so that kind of beats a poke in the eye with a sharp stick, right? Like that's a 2% dividend yield per year, and it's paid, you know, quarterly. You know, if you're thinking like an investor. But with this, if we're okay with buying Bank of America, it's in our snack bracket in that it's, you know, under $50 a share. We have $11,500 sitting in cash. So could we come out to December and even do this, say, if we do the 48, it's not quite 2%. It would have to be, you know, almost, you know, what? Yeah, almost $1. But could we've got 12,000 contracts on the books here. So if we looked at buying covered stock, we're paying $46 to get in. What's the most we can make is if we're called out at 48. So if the goal is to be called out, you know, and you can look at it two ways. It's like if you're called out, how much are you going to make? So we'd make $1.82, and we're risking how much? $46.18. So that's a 3.94, or almost, if you rounded, you could call it a 4% return for a trade we'd be in for a month. Well, what if it pulls back instead? Well, if it pulls back, say to around this 44 level, we could buy back the call, and then when it bounces, sell another one. And that's what we ended up doing the last time. And so if we're saying, well, you know, we're making a bit of money if we're bullish on this stock. Are we bullish on the sector? Well, it's in the financial sector, so I'd say yes, we are. And again, it's just the thought process we're going through. You know, this sector is near all-time highs. That was the bull flag, you know, in a stiff wind. So we're going to look at, so we're out of our JP Morgan now. So we're going to come back to our trade tab. Now, where might we put a stop? Now, if we really want to stay in this, and we had this conversation around GoDaddy, you know, we could say, well, here was our previous, you know, here was a resistance level. When it gapped up, it kind of started here. Might this act as support? So if we took that $44 44.24. And, you know, support and resistance are a range. They're not a finite number. If we put our stop at 42.91, how much are we risking? Is it more than 500? No. Well, then we're okay. And again, if we look at the option chain and we come out here to 20 strikes and we look at this 43 level, there's only a 12.5% chance of it falling, being in the money, like at $43 or below come December 20th. You've got a 25% chance of it touching it and triggering a stop. But that means that if we put our stop at 42.91, there's a 75% chance that even if it pulls back, that we'll still be in the trade. And, you know, if you snug up your stop really tightly, the tighter the stop, the higher the probability of it getting nicked out on, you know, that it comes down. It just has to kiss it to trigger that exit. So we're going to do our single order, first trigger sequence, right click, and create an opposite order. And again, I'm going to get myself in trouble. So I'll do this afterwards, but I'm going to make this a market order to exit if the stock goes below 42.91. And the reason we're making this a market order is because we don't know exactly what the call price will be. So we want to exit based on the price of the stock. So I'm going to go ahead, and what I'll do is we'll just put this order in. We're buying our covered stock, and I'll put the exit in later. Okay, so that's our buy right covered call. Are there any questions on that? Okay, well, believe it or not, our 45 minutes, we have now invested most of it in the topics that we have covered today. So I'm going to have to wrap. There is a survey in the chat, and I'm just reposting that now. So if you click on that link, there's 2 questions. You know, one was I hated it. 10 was I loved it, and I'm going to keep coming back. And then there's everything in between. And then there's also the ability to put comments in. So my promise to you is if you put a comment in there, I will read each and every one. I take notes on that, and often they become the subject of the next class. Some of those survey comments or questions, let me know if there are topics you'd like me to cover in future, or if there are things that you think I spend too much time on or not enough. Yeah, so that's the survey. Hit the like button. It helps move this webcast up in the algorithm so that more people can find it. It also, as Cameron May likes to say, it sounds like applause to Cameron and I. I know 86 of you have already hit the like button, but we have 300 people here, so that would be great. And then hit subscribe. And so we have actually covered a lot of ground today. You know, we have closed out the 3 positions. One hit our target, and we decided to take the money and run. So cue the Steve Miller band. We decided to take the profits that we had on the short put vertical and on the other long call vertical that we had on JP Morgan. And then we had placed 2 trades on Tesla, the long call vertical, which with the extraordinary move that Tesla had today, hit our target this morning. And then we decided to take the money and run again on the short put vertical on Tesla. And then we are placing 2 new trades today, a long call on GoDaddy, and then on Goldman Sachs, on Bank of America, we did a buy right covered call. So guys, that's a wrap for today. Thank you for your patience. Thank you for being here. And I will look forward to seeing you in a webcast coming up soon. Go check out the latest mini session. It's the one at the top of the tangerine pile. And thanks to Cameron for being here and the guys behind the scenes for bringing this production to life. And we'll see you in a webcast coming up soon. Up next is Trading Technicals with Mr. James Boyd. James is not feeling well today, so Ben Watson will be filling in for him, but stick around. I'm sure it will be great. Bye for now.